Hey, it's Joshua here with another edition of Mortgage Clarity. And today we're just going to talk about the housing numbers for the month of August 2022 that just came out. As we're recording this, it's September, middle of September. So we just got the official numbers for the housing market for last month. And I wanted to go over that because as I make this video as well, the Feds continue to raise the Fed's fund rate in response to high inflation. And while normally the Fed's raising the Fed's fund rate is a good thing for fixed mortgage rates, it's not panning out so far today based on that. And I think that has to do more with where the Feds are predicting or their negativity towards future inflation. And that's kind of more of what the market's responding to. But back to the housing, I want to go over that because again, in this changing market, there's a lot of those people who love to grab headlines, and they've been calling for kind of a bad market for years, and they've been wrong for years. And they continue to chant this thing that there's going to be a housing bubble and a housing correction, and it's putting fear into the market. So I wanted to go over these numbers and just see if we can, if after looking at these numbers, is the market really as bad as they might seem to make it think? So let's go ahead. I want to minimize myself here. So here's the highlights that we've got. Now, you'll see here the first bullet point. Yeah, the month over month sales for housing has slowed to 0.4% as we come to the end of summer and school starts back up. Our kind of annualized yearly sales about 4.8 million. But while it was down, it was much, much better than the forecast for the month, which was a negative 2.5% or slowdown. So year over year, we also see that we have a 20% slowdown in total sales for year over year. And this is kind of where some people think, oh, well, there you go. Housing market's down 20%. That must be a negative. But they're not looking at everything. What you kind of got to go to is when you look at year over year comparisons, you're kind of also going to ask yourself, what was going on a year ago? And if you go back a year ago, you're going to see that we had a spike, a much higher than normal sales activity because the year before that, COVID first came out and we had a much lower than normal activity in the housing market. COVID came out, things were shut down, a lot of fear in the market. It caused a temporary suspension of people wanting to look. But once it normalized, even with COVID not going away, with just that fear normalizing, there was a resurgence of that pent-up demand. And so in 2021, you had much higher than normal year-over-year sales. So trying to compare this year's numbers to last year's number isn't really giving you the whole story. Now let's just take a look at the makeup of people here, of the buyers. You know, right now, 29% of the total sales are first-time home buyers. That's still a very strong number, same as last month. So it shows that the first-time home buyers, who typically are going to be a little bit more sensitive to rates and cost, that this higher rate month over month has not caused them to exit the market, and they're still representing 29% of the market. Cash buyers, stock market's down as we're doing this, but yet they're still making up 24% of the market. So that's still a very strong cash buyer presence in our market. And investors, 1 out of 6 homes are still being bought by investors. So again, I'm just pointing this out because in spite of what they say is a negative market, investors are still willing to purchase because they believe that values and rents, that it's still a good market to be into. And so they still represent a good portion of the market. Now let's talk about inventory, because one of the things the naysayers have been saying all summer long is that they've been citing that there's been this rise month over month. We're seeing more inventory build up, and therefore, because homes are inventories building, it must be negative. I'm going to show you a chart after this that's going to put this in perspective, and then we'll come back to it. But right now, we see that there's 1.28 million units of inventory. So it's actually dropped from 1.31. Now, the reason I want to point that is I'm going to go ahead and go to this next slide here. Let me just advance to the next slide. And what you'll see here, I'll just move myself out of the way, is right here they were complaining, okay, we have a bad market, housing market showing signs of weakness because inventory is building, right? But what I've been saying, if you've watched my other videos or with the real estate offices I do courses with, what I've been showing them is this rise was not unexpected. Look at it. All the way back, long before COVID, 16, 17, these are all strong housing markets, very strong housing markets. And you see, you always have a buildup, and then you go into your selling season and you sell off. And then you build up and you sell off, you build up and you sell off. What I want to point out, though, is since 2019, this buildup kind of came back to almost the same as we were, but we've never quite gotten back, and we have lower lows and lower highs, lower low, and we came right back in there. But you can see as of this next report, it looks like, just as in the past, inventory is starting to go back through its normal cycle. So again, those who are quoting inventory buildup as a negative, I think are wrong, and that chart kind of shows it. Now we'll continue to monitor it again. That's just 1 month, but it's kind of coming into right what we said. Now people are saying also that they're, because we're seeing lots of price reductions and homes are sitting on the market longer. Again, these are all things that people are stating. I want to point out again that a price reduction in a home is not the same thing as that home devaluing. If you get sellers who are behind the time, who still think you can post a home price way above what kind of where it was last year and get that sold, yeah, you're seeing price reductions as they have to come into to reality of where the market's at. It's not quite as hot as it was last year. But again, just because you're not appreciating or going forward at 20% year over year, and now you're at 15, 10, and 5, and we are slowing down is not the same as going backwards. So let's talk about it. Are homes really stagnating on the market? Well, a normal market, 6 months of inventory. Right now we have 3.2 months of inventory supply. So we're still well below what we would call a normal market. So I would say far from being in a negative market. But I also want to point out active listings, because this is how numbers can really get confusing. What we want to look at is active listing. If you go back to the chart I just showed you, we have about 1.3 million, or actually, 1.31 million units of housing. However, a portion of those houses are already under contract. So if you wanted to go out today and you wanted to look at it, you actually couldn't even look at almost 39%, almost 40% of the total inventory, active inventory. It's already under contract and you can't even look at that yet. So in a normal market, only 25% would be under. So again, still very strong. So out of the 1.28 million inventory, you only have 779,000 that's active listings, of which 39% are under contract. Also taking into account new construction. When a contractor starts to build a new development, those homes go onto the market. They're in the active listings, but they're not built yet. So it's not like you can buy it and move into it. So again, very strong. When you take the active listings, into supply, you take out the ones that are under contract, you actually only have about 1.9 months of supply when considering that. So you can only actively go see about 800,000 or 1.9 months worth of supply. So again, very strong. And this last bullet point here, just want to point that out. Again, people are complaining that it's taking longer to sell their homes. Well, that is true. Homes were selling in 3 or 4 days a week. It's 16 days. But again, I got to do a reality check here and let you know that 16 days to sell a house, that's just not long. Okay, that's amazing. It's a huge dollar price item that you're trying to sell, $400,000, $500,000 home, and you're still on average for those homes, 16 days on the market. So I think that this August report that just came out was extremely bullish. I think it continues to show that while the market is changing, while yes, the sellers are going to have to get a little bit more competitive on their pricing, although again, I don't see it devaluing. Sellers might have to be more open to negotiating, which is a great thing. This is what buyers have been waiting for, to be in a market where a buyer could actually talk to the seller and negotiate repairs and stuff. So this is a good thing here. But taking that into account again, how fast things are moving, inventory supply, the rates, I don't have it here, but if you look at what are going on with rents, the appreciation of rents, it's all showing that it is still a very strong housing market. So there you go. That's my 2 cents for what it's worth, but I like to show the numbers there. If you like this video and you found it helpful, please be sure to subscribe so you get alerted to other videos that come online. Hit the like button, of course, and share with your friends. Until next time, have a fantastic day. All right, bye for now.